This is South America, and in almost all of this region, China has acquired so much copper, soy, and pork, as well as built so many roads, trains, power grids, and bridges that it has eclipsed the United States as South America's greatest trading partner and is now the only country that trades with Brazil, Chile, and Peru on an individual basis. But how did it happen? Why is China growing its influence over South America? And is there any threat to United States dominance?
From the billion-dollar acquisition of one of the world's largest salmon companies, to the purchase of copper and lithium mines, to wineries and fruit fields, China has set its sights on Chile.
In other world news, Honduras has formally broken off decades-long diplomatic relations with Taiwan and switched to China.
Chinese state enterprises are playing an increasingly important role in Brazil's infrastructure, in some cases controlling companies previously owned by the Brazilian government.
South America has long been a focus of great powers. Japan approached South America in the 1970s, seeking resources and economic diplomacy during its high economic growth era. However, such active participation came to an end after the severe financial crisis that gripped South American nations in the 1980s. The intra-regional trade has grown since the 1980s in the region, and now it makes up roughly 1/5 of all exports. Whereas the start of the foreign trade was around the turn of the 21st century. This was the time when the United States ruled the region in terms of trade. However, soon, China entered the region in the 21st century with unprecedented speed with its political and financial influence at the time when the United States concentrated on the wars in Afghanistan and Iraq. So basically, it cleared the road to the South America for China. Now, coming back to the point, the trade in South America experienced huge shifts after China stepped in and US stepped out. In fact, it has been reported that between 2000 and 2020, China's commerce with South America and the Latin America as a whole increased by 26-fold. And it has been analyzed that by 2035, commerce between the South America and China is projected to more than treble, reaching over $700 billion. Even the exports to China from the region made up only 1.6% of all foreign sales in 2001. And by 2020, this percentage had climbed to 26%. This contrasts sharply with the fate of the region's exports to the United States, which fell from 56% of the total in 2001 to 13% in 2020. Okay, now, let's break it down country by country to make it easier to understand. So, today, Brazil sends 30% of all exports to China, including 80% of its soybean crop and 60% of its iron ore. Moreover, Argentina's soybeans and meat are extensively traded with China. Likewise, Chile is now China's top provider of a variety of products and commodities, from fresh cherries, grapes, and plums to copper ore and molybdenum. And according to research, in 2020, Ecuador exported a lot of animal products, mineral products, and wood products to China. Machines, $1.32 billion, metals, $473 million, and chemical products, $406 million, were among the exports of China to Ecuador that had a significant net trade in 2020. Also, China's Ministry of Commerce has reported that the bilateral trade between China and Mexico increased by 41.9% year over year in 2021, reaching a record high of $86.6 billion. And if we talk about the foreign investments of China in South America, Chinese loans and overseas foreign direct investment (OFDI) are also quite important. In 2020, Chinese OFDI in South America amounted to roughly $17 billion. Similarly, in 2020, Brazil has received more than half of all Chinese investment in South America, around USD 66 billion, with 3/4 of that investment dedicated to the energy sector and the rest going to agriculture, infrastructure, and other areas. China is becoming increasingly interested in Colombia, which the International Monetary Fund, IMF, ranks as South America's fastest-growing economy. Zijin Mining Group Company of China purchased a gold mine in Colombia in 2020. In terms of significance as a market for Colombian exports, China has placed 37th in 2000. However, over the past 10 years, these figures have altered at an accelerated rate. It is now the second largest trading partner of the country. Moreover, in recent years, Chinese banks have also increased lending to South American governments. The Inter-American Dialogue said that between 2010 and 2020, 94 loans totaling $137 billion were made in the region by the China Development Bank and the China Export-Import Bank, particularly to Brazil, Ecuador, and Argentina. Most of these loans were given to finance the construction of infrastructure by Chinese businesses, and they occasionally included financial conditions that required future sales of raw materials. China and Argentina also have a significant currency swap agreement, which supports China's decreasing foreign exchange reserves. In addition to that, Argentina has just joined China's Belt and Road Initiative, for instance, and the Brazilian president has also approved large trade agreements. In fact, China has surpassed the United States as South America's top trading partner, and its state-owned enterprises are significant investors in the region's energy, infrastructure, and space sectors. Now, this might have raised some questions in your mind, like, has the United States lost ground in South America, or is it still their number one trading partner? And has China taken over the South America in terms of trade just as it has done in Africa and Southeast Asia? Well, it is no secret that China has been investing heavily in South America over the past century, challenging the United States' long-standing hegemony and elevating itself to the position of the region's top trading partner. Many countries like Brazil, Chile, Argentina, and Uruguay now export more to China than to the United States and the European Union combined. So yes, the United States is losing its ground to China, and China's growing footprint in the region has raised concerns. In fact, the United States has always been fearful of outsiders in its southern neighbors. The United States has recently been attempting to offset China in part by highlighting the danger of purchasing technology from state-controlled firms that can be used for both military and civilian objectives, such as espionage. Moreover, in order to counter a rising China, President Biden has long urged that the United States should reaffirm its leadership in the region. Now, what can we expect from the South America and China trade relationship in the future? Whether these relationships will be mutually beneficial or just a mere dependency? Well, for China, the investment brings political returns. China has consistently increased its economic and political participation in South America over the past 20 years as part of its commitment to developing a strategic partnership with the region's nations. China's efforts in this area show not only its desire to strengthen its economic ties and political ties with countries in South America, but also its strategic objectives of forging its own sphere of influence there and boosting its soft and hard power in order to improve China's position at the systemic level. With access to Latin American markets, resources, and investment opportunities, China may maintain its economic and social advancement and develop into a superpower capable of altering the structure of the current international order. For example, the Dominican Republic, El Salvador, and Panama have all shifted from recognizing Taiwan to China over the past 4 years. These types of partnerships in Latin America give Beijing crucial veto power at the UN and support for Chinese nominees to international organizations. Additionally, it gives China the ability to integrate technological innovators like Huawei and ZTE. As a result, China will be able to exert more influence and soft power over its Latin American trading partners and move up the global power scale. On the other hand, South American countries may agree with the fundamental tenet of China's economic strategy, that China's expansion is not a threat but an opportunity to increase wealth and prosperity. Chinese investment in South America's infrastructure and resource industries is also significant. For South American countries, the growing presence of China is an opportunity to pursue development agendas which may not be otherwise viable. Many of the South American regions are eager to have Beijing assist the region in modernizing its infrastructure and diversifying its economy. In fact, Chinese technology and money have helped build one of South America's largest solar energy plants in Jujuy, Argentina. Moreover, the firm that provides electricity to more than 10 million homes in Brazil is owned by Chinese energy behemoth State Grid Corp. So, answering the question that is most beneficial or not, I would say it is a win-win situation for both of the partners. And if we talk about the future, over the next 20 years, China will become an increasingly important determinant of South America's economic outlook. As it can be seen that how in 2000 Chinese participation accounted for less than 2% of South America's total trade, and in 2035 it could reach 25%, while the trade within the region of South America or Latin America as a whole and would become even more China-focused. So, looking ahead, it is clear that China's role as an investor in the region will only increase. On the other hand, with many battles taking place between US and China, South America may face a number of challenges due to geopolitics. But if the region plays its cards well, it could reap significant benefits. Are you interested in learning more about such topics and want more videos like this one? Tell us in the comments section below. And make sure to subscribe to our channel and hit the like button as well. Thank you for watching.